Welcome to this video on the chart of accounts. The chart of accounts is simply a list of all the accounts that a business uses to keep their records organized accounting software groups these accounts by their type, and while the names might vary slightly from one software to another, they're generally similar in Odoo. All of our account types are split into different categories depending on which financial report they belong to. Let's look first at the accounts that appear on the balance sheet. Equity accounts that appear on the balance sheet. Equity accounts represent the financial ownership of a company. So these are used for shareholder accounts, and retained earnings assets are what the company owns and can be separated into subtypes like bank and cash, accounts current assets like your accounts receivable, and fixed assets like property, equipment company, vehicles, etc. Liabilities are what a company owes, so these are future obligations such as accounts payable, short and long-term loans, etc. And for the profit and loss report, we have our income and expense accounts. Income accounts. Or where a company keeps track of revenue coming in from their sales. By using multiple income accounts, companies can track their income from different sales channels or different product categories to have a more detailed understanding of their revenue. Similarly, expense accounts are where a company keeps track of their expenses going out, whether that's due to external purchases, inventory loss, or internal expenses. Let's take a look at it in our Bloom database. So, to start off, we'll open the accounting app and go into configuration and chart of accounts. Now there are a few things to keep in mind about the chart of accounts. First, the chart of accounts can look a little different depending on which fiscal localization the company uses. That's because the typical chart of accounts in Canada, for example, is different from the H of accounts from Belgium. Like we see here, however, as databases may use the multi-company feature, it is possible to have multiple charts of accounts in a database, but there can only be one chart of accounts per company within each company's chart of accounts per company's chart of accounts. Each account must have a unique code and a name type, and if it allows reconciliation, this option allows you to enable reconciliation of journal items that hit this account with open transactions, such as payments in your bank. We can look at any one of these accounts. We'll take an income account for example and use the view option to get into the form view. So here you'll see we have a few additional options. The really important one is this deprecated field. This is basically just archiving, but for an account. The chart of accounts and the account types. The chart of accounts is basically the DNA of the company. So this is how we structure all the value that needs to be represented in the accounting. Every item in the company is related to an accounting. Let's it doesn't exist in the accounting. Let's it doesn't exist in the accounting. Let take some examples in the Belgian GAAP. So GAAP means generally accepted accounting principles. So these are the accounting rules that apply in Belgium. So every time you see GAAP in a country before it, it means that those are the accounting. It's based on the accounting. It's based on the accounting rules of this country. For example, let's take coffee. So you buy coffee for your employees. It's the costs for you. It's an expense for the company. So it's the account. 61. The debt to the caterer for the office party, so it's a vendor debt. It's a payable account, so it's account 44. The new car that you need to buy, is an investment, so it goes in the account 24. The sales of goods is an income, a revenue, so it will go in the account 70. And a journal entry, so in any journal entry that we will encode in the system, we will use the accounts to create the value in the company's accounting. Without those, the accounting doesn't exist in Belgium. The accounts are divided into classes. Each country has their own, but in continental accounting, they are more or less the same, rather than. For example, in Anglo-Saxon accounting, the labels are more important than the codes. So the number of the account, so class, number 1. So all the accounts that start by 1 are the accounts are related to the class equity and subordinated debts, 2 for fixed assets, 3 for inventory, 4 for current assets and liabilities, so receivable and payable, 5 for banking cash accounts and expenses and income for the account 6 and income for the account 6 and 7. So this is not something that you should remember and learn by heart. It's just to help you out when you talk to your client to be able to interact with their accounting needs. When they're explaining something, the fact that you know which type of account is related in there is present in their charter account will help you give better advice regarding their accounting requirement. So just keep that in mind, and you know it might help you out when you're in a real life situation now. Let's check out the account types. This is quite Odoo specific. So we have different types that for which we split all the accounts in every account. In every account needs a type of account, and the type is chosen based on the nature of the account. And these accounts, these types, bring structure to the chart of accounts and to the entries themselves. Also, we can also use that it impacts the reports. So in Odoo, the generic reports, for example, are built based on the type of account. We'll see that in the future part and future topics, that based on the country accounting principles, the financial reports may be split based on the type of account, based on the code of the account, or based on the tags that may be undercut. We'll start to see that together. But keep in mind that the account times are really important for generic financial statements. In order to have the splits between the types of accounts. That's all for me in this part. Thank you for watching and see you in the next topic.